Tariffs are traditionally done to protect industries, domestic industries, but we don't have those domestic industries anymore. We've offshored them. We've offshored so much of our manufacturing and production. In essence, we're not protecting what we can't protect what we don't have. In essence, you're imposing a tax on your citizens.
Yeah, effectively, the US has, lots of Western countries have done this since we came off the gold standard. We've exported our inflation to these cheaper economies like in China and India to produce that for us.
Lots of time to bring the factories home, to modernize them, to equip them, to train the workers. And that's a lot easier said than done. But here again, you need to take one step at a time. I would argue that the last administration in many ways has done more to damage this country than any external foe ever could. So I think there's lots of reason to be optimistic with what President Trump wants to do. And I admire how fast he's rolling these things out and to the degree of ambition that he's throwing into the mix to try and make this country a better country. So I don't count people out like Elon Musk, and I don't begrudge the ambition. I just think that it's a pretty heavy lift.
Good evening, investors, and welcome to the Economy Express channel. Tonight, we bring you a critical analysis of the latest financial upheaval, a development that could reshape global markets and redefine the role of precious metals. U.S. banks have reportedly been ordered to weaponize gold and seize assets amid an estimated $8 trillion tariff fallout. Andy Schectman, president of Miles Franklin Precious Metals, warns that the world is on the verge of a massive economic transformation.
And at the onset, I think what happens is that you'll just see these countries like India just devalue their currency, make their currency worth less, in order to not feel the pain so much. And I think you'll also see situations where they'll just raise their prices at the same time to offset the
increase
the tariff. And so if they want a weak dollar and low interest rates, these countries faced with tariffs will just drop their currency proportionately to fight the weak dollar. And at the same time, they will also raise their prices on their goods to pass on the cost of the tariff to the consumer. And that's what will happen if we don't have industries that we're protecting. In essence, we're buying from these people, just paying a higher price, buying from these countries. I'd rather see us close the borders, close our military bases, bring everybody home, and worry about ourselves, be the engine of production and manufacturing, and employ as much as we are doing to protect the world, protect our own country. I don't know if that will happen, but yeah, I think his policies, while there are reasons to be very optimistic, at the same time, they ought to be very inflationary. You're talking about $8 trillion in, I think it's 8 trillion. I'm pretty sure that's what I wrote down here. 8 trillion in, yes, it is. 8 trillion in tax rollbacks. You're talking a few trillion in tariff. You're talking lowering of interest rates. This will make your currency weaker. This will create inflation. This will be good for, again, this is the Cantillon effect that we've talked about so much, where this stimulus is going to impact the 1%. You can see it already on Wall Street and cryptocurrencies. You can see it in assets that are going to go much higher. And that's very inflationary. This is a risk-on environment all of a sudden. And the inflationary impact ought to be a gift for the pullback we've seen in gold and silver. And I want to address that just for a moment, because look, whether or not people think the price of gold and silver has been managed by the West, it doesn't bother me if they don't. I would just simply say it's irrefutable. It has been, and it is. And there are lots of reasons why they manage it. But there have been a handful of commercial banks that have been getting absolutely murdered on COMEX and the LBMA with these very entrenched short positions. This gave them the option the opportunity with the irrational exuberance that we see surrounding the Trump victory. And I want to comment on the exuberance in a moment, but they've used that as an opportunity to push the price of gold and silver down the hill a bit, which then triggered the sell orders by all of the hedge funds and their algorithms. And the hedge funds are now shifting to risk-on assets like Bitcoin, like stocks. And it's allowed them to normalize their books and to clear off all of these shorts, or many of them that have been burying them in massive losses. And I think the irrational exuberance, it's irrational on some levels, but after what we've lived through over the last 4 years, the bizarro world what we've lived in, where everything that we've talked about, where your value is not by your merit and how hard you work and equal opportunity, but by your lifestyle and equality for all, where people question the integrity of the electoral system, the judicial system, the immigration system, the lawlessness, the wokeness, all of this stuff, the cancel culture, the censorship, it's driven everyone nuts, except the far left, who's embraced it. It's driven most people, even in the center, nuts. Really? This is not the country I grew up in. What's going on? And I think people have had enough of it. And that is part of the reason. The bottom line is, I think that factors into it too. People just have a breath of fresh air that, oh my gosh, maybe we can go back to the ideals that made this country special. And that's, I think, part of it. But at the same time, people are overlooking what I think will be a massive inflationary event of lower interest rates, a weaker dollar, which weakens the purchasing power, which brings into the Cantillon effect because the purchasing power of the dollar goes down, inflation goes up. The assets that the wealthy have purchased and that are able to purchase again through pivoting with interest rates and bringing them down, it's the same mistake we've made over and over again. Yeah. So from that standpoint, I don't see it getting better. In fact, maybe even worse. But from everything else, maybe the safety and the quality of life, at least to the way we used to be, or mirroring what we used to be, I think that is something to be very happy and optimistic about. But in terms of owning gold and silver, I think it's never been more important to own it. Don't forget about the banks whose balance sheets are already in tatters, and now rates go up again on the 10-year. They tried to lower the front end of the curve by 75 basis points, and the 10 and the 30 went up more than that over the corresponding period of time. So you can lower the federal funds rate all you want, but the bond market is saying, no, you're trapped. You're trapped because you're not going to lower rates on the back end. We're not going to accept, not only do we know you're lying about your measurements of inflation, money creation, but we're not going to wait 10 years and only take 4.5% on a treasury. You're going to have to give us more than that. And that's ultimately where we go. I wouldn't be surprised to see the 10-year yield over 5% by the time he takes office, and much higher shortly thereafter. So yeah, these are challenges that the market will face. And the old mantra, higher rates are bad for gold, that's nonsense. We watch gold go higher and higher and higher nonstop with 5% rates on 6-month treasuries. The 10-year treasury, who wants it at 5%? Who cares? It's different on the 6 months. So no, I don't think we've seen even the beginning of the end of gold's rally. I think most of the southern and eastern hemisphere are looking at this pullback as a gift. I think people should look at it that way, because ultimately this administration will do what every other one has done, and that is to choose inflation over austerity, over the difficult decisions. So yes, they may cut some stuff that probably won't be felt by average Americans, and I hope they do a lot of that. But no, inflation is here to stay. Where are all these countries? What are they doing with their excess reserves? They used to put it into U.S.
If you own assets, trade in commodities, or care about your financial future, pay close attention. Hashtag the reality of tariffs, a hidden tax on Americans. Traditionally, tariffs are designed to protect domestic industries. However, Schectman points out a significant flaw.
But she said the most logical thing I've heard a politician say in a long time, and that is, who the hell wants to buy our Eurasian treasuries? The only way you'll get people to really inspire any confidence, rather, in the treasuries is to back them by gold. And she said that. I've never heard a politician say anything that's heresy, for God's sakes. And yet she said, back it by gold, have it redeemable in gold, and you will get people buy the 30-year treasury. And I think it makes tremendous, perfect sense. You back the 10-year treasury with gold, or the 30-year treasury with gold, rather, you will, for the first time in a few years, have a rekindled interest in our treasury debt. The economy they are inheriting, they've been lied to. We've all been lied to. And in terms of what they're inheriting, the unemployment numbers are much higher than they say. The inflation numbers are much higher than they say. The problems are much deeper than everyone is being led to believe. At the same time, we've weaponized the treasury market. People don't want to hold our treasuries anymore, because not only do they have inflation and default risk, At the same time, they also have weaponization risk or sanction risk. And Trump is not saying the right things to try to re-inspire that confidence. He's saying if you try and move away from the dollar, we'll sanction you. We're going to put tariffs right across the board. And we're choosing inflation. It's very obvious. We're choosing inflation over austerity by lowering rates, going for a weak dollar and stimulus in the form of lower rates. My mentor Richard Russell always said there are two choices. You can inflate or you can default. I would add option 3, and that would be to revalue the price of gold. And I think that's something they notice. We've talked about this, that the head of the Dutch National Bank has been advocating for this. And of course, Senator Loomis from Wyoming has talked about this. As she said it in the context of funding a strategic Bitcoin account right after Trump spoke in Tennessee at the Bitcoin meeting. She gets up and says, I'm going to float a bill to Congress that we revalue the gold held it on behalf of the Treasury at the Fed, and we are going to revalue it to a level strong enough, high enough to take a portion of that revaluation to buy Bitcoin for the strategic account. I think if you raise and look, we're right on the doorstep of Bitcoin at $100,000. Why couldn't gold be at 100,000? You put gold at 100,000. Tell the world any gold delivered to the Treasury will be paid $100,000. You could offset very quickly the majority of the debt that you owe on your balance sheet with an asset. It would put us in a much stronger position. Is it something they notice? Sure. It would be inflationary. Sure. It's better than outright default. It's better than outright hyperinflation. So I don't know. I think that's the pattern everyone's chosen since the beginning of time. That's why coins have ridges on them, because the Romans would cut right around the diameter of the coin to make it just a little bit smaller. If you do that to enough coins, you have enough shavings to make more coins. By the end, they were taking all the precious metals.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing...
U.S. has offshored much of its manufacturing, meaning there are no industries left to protect instead of safeguarding American jobs. Tariffs function as an indirect tax on consumers, forcing them to pay higher prices for imported goods. In response, countries like India and China are expected to devalue their currencies, making their goods cheaper and offsetting the impact of these tariffs. This means that, rather than leveling the playing field, the tariff war could further accelerate inflation and weaken the purchasing power of the U.S. dollar. Hashtag $8 trillion in stimulus and tariffs, the inflationary storm. The latest policy proposals, including $8 trillion in tax rollbacks and new tariffs, combined with the lowering of interest rates, are expected to further devalue the dollar and push inflation even higher. Schectman highlights the Cantillon effect, where newly created money disproportionately benefits the wealthiest individuals before it trickles down to the broader economy. Wall Street, cryptocurrencies, and high-end assets are already experiencing a surge, while everyday Americans face rising costs for essential goods. Hashtag the Federal Reserve's role, trapped between inflation and market instability. The Federal Reserve is caught in a dilemma. Despite attempts to lower front-end interest rates, long-term yields on the 10-year and 30-year treasuries continue to rise. This signals that investors are losing confidence in U.S. debt. The bond market is demanding higher returns to compensate for the risks of inflation and potential default. Schectman predicts that the 10-year yield could surpass 5% by the time the next administration takes office, possibly rising even higher. Historically, rising yields have been seen as negative for gold, but this time is different. Gold prices have continued to climb despite high interest rates, a sign that the global financial system is shifting. Hashtag banks and the gold market, manipulation and strategic moves. Gold and silver prices have been manipulated by Western financial institutions for decades. However, the recent economic policies have allowed major commercial banks to unwind their deeply entrenched short positions on gold and silver. Hedge funds, sensing a risk-on environment, have pivoted to assets like Bitcoin and stocks, giving these banks an opportunity to stabilize their books. The artificial suppression of gold prices is being viewed by global investors, particularly in China, Russia, and the Middle East, as a prime buying opportunity. Hashtag weaponizing the U.S. Treasury market, a dangerous precedent. One of the most alarming trends is the weaponization of U.S. treasuries in response to geopolitical conflicts. The U.S. has frozen and seized foreign-held treasuries, undermining confidence in the dollar as the global reserve currency. This has led countries to reduce their reliance on U.S. treasuries and shift reserves into gold and other tangible assets rather than financing America's debt. Nations are now transacting in local currencies and building strategic stockpiles of commodities. Hashtag the return to a gold-backed system? With confidence in fiat currencies eroding, some policymakers are proposing a return to a gold-backed monetary system. Senator Judy Shelton, a longtime advocate for sound money, recently suggested that the U.S. should back its treasuries with gold to restore investor confidence. If the U.S. were to revalue its gold reserves to $100,000 per ounce, it could theoretically offset much of its national debt overnight. This idea is gaining traction as central banks continue to hoard gold at record levels. Hashtag final thought. What should investors do now? The financial landscape is evolving rapidly. The global shift away from the U.S. dollar, combined with inflationary policies and geopolitical instability, is accelerating the transition to a commodity-based financial system. For investors, the key takeaways are clear. Gold and silver remain the ultimate stores of value in times of crisis. Central banks and institutional investors are accumulating gold at an unprecedented pace. The move toward a gold-backed financial system may not be far off. Andy Schectman's message is clear. Owning gold and silver is no longer just an investment, it's a necessity. That's it for tonight's special report on the Economy Express channel. Stay ahead of the markets, stay informed, and protect your wealth. I'm your name, signing off. Good night, and see you next time.